Yesterday, the price of Bitcoin crashed because Jerome Powell opened his fat mouth. Today, the price of Bitcoin rose in price because nobody cared what Jerome Powell had to say. Currently, the price of Bitcoin is $28,225, and I'm a very happy boy today because the price of Bitcoin is up, and that means my trades that I placed yesterday during the crash at this period of time are now in some quite significant profits. So I'm going to show you that in today's video. I'm going to show you what my plan is for the future with regards to these trades, and at the same time, the banking crisis is still... I'm going to explain this number here on the screen in just a moment, but it's on the cusp of a really big move to the downside in terms of big banks. I think are going to start failing within the next couple of months. I don't know really how long these things take to play out. Generally, they do take a long time to play out, but ultimately, it's bullish for Bitcoin because it's proving that Bitcoin's use case is actually a viable one in terms of an alternative store of value rather than putting money in the banks. You can be your own bank by just having a Bitcoin wallet in Bitcoin. Now, when it comes to the price of Bitcoin, of course, I think it's pretty bullish right now. That is why I'm currently long on the price of Bitcoin. This is where in fact, I've added to my trade a little bit today. This is actually the price of Ethereum. Now, I've got a couple of trades open right now, a couple of losses. I had to take a little bit of a loss on that trade yesterday to try and mitigate the loss, but currently $13,000 in profit on this one and $3,000 profit on this one. A couple of bad trades down here. Nonetheless, an overall good market. It's also important to point out that is the Lux trade down here. That Lux trade I've had open for too long at this point in time. The CTZ trade, again, had it open for a long time. And they're just altcoins. And I'm really just waiting for the altcoin market to start coming back. I've got no intention of closing those trades in a loss. I'll keep dollar cost averaging them in. And at the same time, at some point, they'll come back because the altcoin market looks on the cusp of a big recovery, actually. So in terms of what we're expecting for the price of Bitcoin, let's discuss that right now. But just before we discuss that, drop a like on today's video. We're trying to get 1,000 likes on this video, so do drop a like on it. I would really, really appreciate that. Also, if you are new to the channel, please do subscribe. I'd appreciate that. And let's crack straight on with some Bitcoin analysis. And right now, on the 1 hour chart, if we were to zoom out on the 1 hour, you're able to see that essentially Bitcoin just keeps on going up. Now, currently, one very key level of which we need to close a 4 hour candle above is $28,500. This is this higher level of resistance. If we go over to the 4 hour chart right here, we've yet to close a 4 hour candle above that level of resistance. When the chart resets, you're able to see it a little bit better. But essentially, if we're to break through $28,500 on the price of Bitcoin, we should, in theory, go back up to the top of this range here, around $32,000. And that's really what I'm waiting for to play out on the price of Bitcoin right now. Now, what is the likelihood that actually happens? Well, looking at the DXY looks like somebody that is, just really, really unhealthy at this point in time. It looks like it's going to keep heading to the downside. Now, this is the weekly chart on the DXY. You can see basically, as I pointed out a while ago, this is not bullish. A lot of people are expecting this to recover for some reason. But why would the DXY recover if the Fed is going to have to print loads and loads of money, which will devalue currency? Why would it recover in the middle of a banking crisis? At the same time, you've got Russia and China banding together to use the Chinese yen as the petrodollar, essentially using it as their new base unit as currency for trading their oil. So I don't expect the US dollar to recover in price anytime soon. For that reason, I expect the price of Bitcoin to start recovering in price quite significantly. So at the same time, how is Ethereum looking? Now, Ethereum is looking really, really amazing, to be honest. But the key thing here is, yes, of course, Ethereum has to close a 4 hour candle above the level of $1,831. If it closes the 4 hour candle above that level, we're looking at a jump up, a very significant jump up. And let me show you how big of a jump up that would be. If we go over to the 4 hour chart and zoom out on the price of Ethereum, you can see here that essentially if we lose that level there, the targets for Ethereum get quite silly at this point in time. You're looking at like 2,600, 2,400, kind of this kind of trading range up here. We should just in theory just jump between it because there's no kind of liquidity in this range right here. We should see a similar move to what we actually saw when, again, dropping to the downside, there was no liquidity in this range right here. We're bumping to the upside. There didn't used to be liquidity in this range right here. So from my perspective, Ethereum's looking pretty bullish in terms of the US dollar way it's trading. But at the same time, the Bitcoin versus Ethereum chart for me is where the money is at right now. We've got a clear inverse head and shoulders that has formed at this point in time. Thank you very much, Jerome Powell, for providing the perfect trading setup on that one. So from my perspective, this should head back to the upside at this point in time, hence why I maintain my Ethereum long position. But I get more and more bullish every single day when it comes to what is going on with these banks. banks. We've seen the price of Deutsche Bank crashing again today. It just looks like the DXY. Everything to do with traditional currency right now looks terrible. Now, one of the key terrible things about this market right now is the way that banks are loading their debt. Of course, Deutsche Bank didn't report any figures for 2022. We don't know the state of the books inside Deutsche Bank right now. We just know that they're incredibly unhealthy, which is why the market is selling off the stock right now. Now, from my perspective, though, Wells Fargo, I think, is going to be the major bank that collapses. Wells Fargo stock is down 1.59% today, having had a relief rally yesterday. I did say yesterday, look, these are nothing but relief rallies because Jerome has opened his fat mouth. When Jerome closes his mouth, the market returns to reality and they stop trading what the man is saying and they start trading the actual numbers on the charts. And the numbers on the charts right now are not looking good at all. So let me explain some of these banking numbers and what is going on, because I've done a little bit of research today. You can see I've even been busy and highlighting things. So let me explain this. Currently, Wells Fargo in mortgage-backed securities hold $269 billion. The value of those assets across the course of the past year have depreciated 16%. At the same time, commercial and industrial loans, they hold $386 billion of. They hold in consumer installments and loans, $129 billion. They have in real estate mortgage loans, $424 billion. And they only keep a loan loss allowance reserve of $12.9 billion. Nowhere near enough to cover a financial crash, essentially. So, I mean, this fund is essentially pitifully small compared to what it really should be. The key thing here is in total assets. This is what I find really fascinating. All of these banks are classing loans as assets. So they're including all of these numbers here within the total value of their assets that are sat within their bank. And currently, in terms of Wells Fargo, they've got $1.9 trillion of assets under management. But when you calculate what proportion of that is in loans right now, the proportion of assets in loans at Wells Fargo is $1.2 trillion. I did all of the maths. I mean, it's pretty simple, just add all the numbers together. They've got $1.2 trillion in loans and only $1.9 trillion in assets, which means, very simple equation here, if somebody was to withdraw $700 billion from Wells Fargo would not be able to pay out the full amount, and they would not be able to pay out anybody else after that level. And to be honest, the bank would probably collapse with only $300 to $400 billion worth of withdrawals, which means if the American public get wind or sniff a kind of banking crisis, of which is all over the news right now, they're going to start withdrawing from these accounts, and it's going to cause Wells Fargo to just crash. And we're seeing this with Bank of America, we're seeing with everything right now. You look at the daily chart on all of these things, it's dropping to the downside for a reason. Remember when Bitcoin kept dropping to the downside and you're going, yeah, you know, I think it'll bounce at this point. It's not going to bounce. It's going to keep dropping. It's inevitable. And when it keeps dropping, the share price will keep declining. That'll keep making market confidence in these banks decline. Don't think that, oh, this is the end of it. Look what happened last time round. This is pandemic crash 2020. The price just kept on dropping and dropping and dropping and dropping. It does, like, these markets don't just recover overnight. It's a long-term recovery process and it has to crash before it can recover. So even if Wells Fargo isn't to go bankrupt, even if they're to get some kind of Fed bailout, we're expecting the markets to crash when it comes to the banking organizations, which is good for cryptocurrency, because what the people do if they withdraw $400 billion from a bank, where do you store $400 billion? Well, you can't go and buy houses with it because the housing market is going to crash if the banks crash, because the banks hold more homes and houses and properties and buildings than anybody else in the world. Most of the world's debt is stored in property. So you don't go out and buy houses. You can buy watches, but you're buying an awful lot of watches. You can buy, I don't know what you can buy for 400 billion. You can buy a lot of things for 400 billion, but the point is, it's very difficult to spend 400 billion. And it's not that difficult to buy $1 billion worth of Bitcoin. It's not that difficult to buy $2 billion worth of Bitcoin. Currently, Bitcoin's market cap, actually, what is Bitcoin's market cap? Let's go over to Crypto Saving Expert. What is the market cap of Bitcoin right now? If we go over to here, go on the markets tab, it'll tell us what the current market cap of Bitcoin is. The current market cap of Bitcoin is $592 billion. That is smaller than the debt in Wells Fargo right now. The debt in Wells Fargo right now is $1.2 trillion. So Bitcoin is smaller than the debt. Well, I mean, it's like half of the size, not even half of the size, about 40% of the size of the debt built up in Wells Fargo Bank. That's just one bank in America. People go, oh, Bitcoin, you've lost the opportunity. It's never going to go over. You don't understand. You just don't get it. You don't understand how big Bitcoin can become. Bitcoin can go to $100,000 an asset very quickly. I know that it doesn't seem likely because, oh yeah, banking crisis and all that stuff. it can happen, and it can happen. It can go to $1 million. It depends. Where do people store their money? Do they buy stuff like Bitcoin in order to stop themselves losing money and getting liquidated in the banks? Don't forget, deposit insurance in the US, I think, is $250,000 per account. So anything above $250,000 is not insured. So you have to pull it. And if you have to pull it out of the bank because you're getting scared that bank is going to collapse, what do you do? What do you do with all of that money? You've got to put it somewhere. But if you leave it in dollars, the dollar is going to depreciate heavily because the bank is going to have to get bailed out by the state. And that means the state is going to have to print money, which is going to cause inflation to rise again. So you don't want to have cash. And if you don't want to have cash, what do you buy? You buy Bitcoin. And that's one of the key reasons why Bitcoin's price this year will likely keep rising in price. Looking at the debt on the balance sheets right now, it looks terrible. This is not the only balance sheet to be looking at right now. I mean, you can see the largest banks in America. We've got $3.7 trillion under asset from JP Morgan, $3 billion under asset management from Bank of America, Citigroup, 2.3, Wells Fargo, 1.9. Now, $1.2 billion, $1.2 trillion of Wells Fargo is at debt. It's not assets, it's debt. At the same time, Bank of America. I've not added up yet. I don't think I added it all up yet. I've not added it up yet, no. But I will do for the next video. I'm going to add up the total debt built up within Bank of America, and I'll explain to you. These things, it doesn't take, all it takes basically for these banks to collapse is a shift in sentiment. You need consumer sentiment. And if you're wondering why isn't this banking crisis being reported on mainstream news? Mainstream news doesn't want to cause a banking crisis. It's all traditional wealth that's built up within the mainstream news. So they don't want to report on this. But that just means it'll balloon just a little bit longer, which is why I say 1 to 2 months. This stuff is going to go terribly. At the same time, we're likely to see Bitcoin's price rallying throughout this entire period of time. So when it comes to what to do about the price of Bitcoin right now, yes, Jerome Powell opened his fat chops. And when Jerome opened his chops, the market crashed. But when the market had done crashing, it's gone straight back up. Why did the market go straight back up? Because people aren't bearish on Bitcoin. Look at how good Bitcoin is looking. I mean, that looks terrible. But if we go to the auto scale here, look at how low Bitcoin's price is and look at how high Bitcoin's price can go. We have literally only just started this reversal pattern right here. This is the W reversal pattern. And at the same time, we are right on the cusp of breaking to the upside. I mean, we've technically already broken that level of resistance. So it's going to go at some point. It's inevitable. It has to go. Just because of what is going on with the banks, with the institutions. I mean, that was the price of Ethereum, just to point that out. But Bitcoin's chart, if we just go over to the price of Bitcoin, it looks literally identical to what you see here, just to prove the point of it literally does look identical. I'm just going to go on to it, just so you can all see that. Yeah, you can. It's literally identical to what Ethereum looks like, other than Ethereum looks probably slightly worse in terms of the way that it's recovered in price. To be honest, no, they look pretty much identical. So, yeah, anyway, market looks good right now. Ethereum looks good right now. My trades look great right now, to be honest. They've gone up during the course of filming today's video. And at the same time, the altcoin market is looking fantastic. I'm buying XTP, I'm buying Daffy, I'm buying Caps coin, because those are my 3 big coins right now that I'm holding in my portfolio. And at the same time, I'm longing Ethereum, I'm longing Bitcoin, and I think the markets look pretty good. If you are interested in trading, check out the tutorial that you'll see on the screen right now. But overall, it's looking absolutely insane right now. In fact, one more thing that I want to bring to your attention, because I've not brought it to your attention yet in today's video, is Fitch US leveraged loan default rates. Basically, the loan default rate at the end of the year was at 1.6%. Now it's doubled to 3%. People are already defaulting on loans. The Fed increasing interest rates by a further 0.25% will not help these loan defaults. It will make it worse and worse and worse, which means when you have loan defaults, it means people start withdrawing from the banks because they feel scared that the housing prices are going to crash. When the housing prices crash, it devalues bank assets. When bank assets devalue, it means that their value of their debt rises because they have to now pay more on it. It's just like this downward spiral that we see with Bitcoin every few years. The same thing's happening with the banks right now. So it's a long process. Don't get ahead of yourself, but at the same time, it's all going to kick off over the next couple months. So follow me on the channel, drop a like on the video, make sure you are subscribed, and of course, watch the trading tutorial on the screen right now. Have a great day, everybody. Thank you for watching, and I'll see you in the next video. Goodbye.